Is the bear market of 2022 behind us for good? Well, these are the major risks and opportunities that lie ahead for investors in 2023 and beyond. Florian Grummes is our next guest. He is a managing partner of Midas Touch Consulting, and he is here to give us his Midas Touch on his forecast. Welcome back to the show.
Thanks for having me again. Always a pleasure with you, David.
Always a pleasure. Florian, before we get into your technical analysis on the current events, I want to revisit a call you and I made when I first interviewed you. Oh boy, it was 2 years ago, 2.5 years ago. I don't remember. It was a while ago, almost 3 years. 2.5 years ago, you were making a gold call. Do you remember what that gold call was? A long-term gold price forecast? Do you remember?
I think I said like a 7 to 10 year outlook should see gold maybe at $9,000.
Yeah, $9,000, 7 to 10 year outlook. It's been 2 years since. So, are you updating that to 5 years, 5 to 7 years? Let's start with the bigger picture first.
No, I think I can still stick to that statement. Basically, gold is looking good again after those 3 months of strong rally. And as you know, in the big picture, all it takes for gold is really to take out this all-time high around $2,075. And then, yeah, we would complete a very large basing pattern, basically, that started in 2011. And you can just imagine how much energy has been compressed over the years. So I think, yeah, $5,000 to $10,000 gold is very possible. And given the macro outlook, the big picture, I think there's every day more reasons to be long-term bullish on gold.
When you examine the past 4 bull cycles for gold, 1971, and then we had 1981, and then 2011, and then 2020, there were various factors at play. But when you look at some of the macro conditions that people usually associate with a bull rally for gold, heightened geopolitical risk, extreme volatility in stocks or other risk assets, extreme inflation. To my understanding, none of those 4 bull cycles that I mentioned saw those factors, barring 1971. That was a Vietnam War, but it was already ongoing. But the other 3, we didn't have a huge war, we didn't have huge volatility, and there weren't market crashes during most of those times. In 2020, markets went up along with gold after COVID, the COVID drop. In 2011, we had a downturn in the stock markets for sure, but it wasn't catastrophic like in 2008. And in 1981, it was fine. So what would you say are the main causes for a huge bull rally in gold overall?
Well, I mean, one of the main drivers for sure is the de-dollarization that is going on. So China and Russia are moving away from the dollar. The so-called petrodollar, which was backed by oil being factored in US dollar, that is step-by-step changing. You see India, for example, making payments in rubles nowadays. Chinese trying to establish the renminbi oil trade. The Saudis have basically partnered with China. And that has been a huge, I think the most important driver for the dollar still being the most important reserve currency on the planet. And I think that is going to change. And we are already in that change. This is a long-term process. It's not happening from one day to another. That takes years, or probably 1 or 2 decades even. But I think that is one of the main drivers. And at the same time, 50 years into the paper money system after Nixon ended the gold standard, we all know the debts are incredibly high and unsustainable. Now we're seeing since a few years massive inflation everywhere. And I think this whole paper dollar system, is going to fail at some point. It's not happening overnight. It's a process. But I think these are the main drivers, and I don't think that the world will directly switch to renminbi or yuan.
Yes.
Because the Saudis don't trust the Chinese either, or the Russians, but they want to certainly do the trade overall in gold, very likely.
It's interesting. Right. As we're speaking today, there are several countries around the world that have looked into the possibility of creating their own basket reserve currency, perhaps based on commodities, perhaps based on other assets. So yes, this de-dollarization trend we've been seeing for many years, actually. But now we're in a digital age where there's competition for the next king of the hill when it comes to a reserve that's not the dollar. I'm talking about cryptocurrencies. Could, in the future, suppose the dollar is dethroned and we have to look towards another form of asset to back our reserve currency on, could that asset be Bitcoin?
It could. Theoretically, yes. I think it's the wet dream of the Bitcoin maximalists, and there is certainly the potential there, but I think it will also take decades. And we will have to see how this is all playing out. As I've said a few times last year, the main threat to Bitcoin really is regulation. They cannot stop the network itself, but if it's forbidden to send certain amounts of money to exchanges, there will be not enough people to buy it, and then it's going to move underground. And I don't know how long it will take, but it could take, yes, a few decades from here. We could see a totally different setup if there is no trust between the big nations that basically ruling the planet.
This issue
right now, it's far away from that, right? I mean, we have to be honest.
The issue of asset price appreciation is obviously important for investors, but against the backdrop of inflation, we have to examine how much in real terms asset prices are likely to appreciate. You were talking about $9,000 gold. Let's assume it goes to $9,000 or $10,000, perhaps even $10,000 in the next, in the foreseeable future. Is it possible then that $10,000 in that scenario will still be, $10,000 today? Maybe it's only worth $5,000 in real terms, right? Maybe we'll see hyperinflation. I'll let you talk about the crack-up boom. Is that possible?
Yeah, of course. I mean, that's what's happening now. You can see that your dollars don't buy the same amount of goods and services like they used to just a few years ago, right? I mean, food prices have been skyrocketing. Rents have been going through the roof. Everything has become much more expensive. Only your salary has usually not basically went up in the same matter, and that's exactly what's happening. So you basically might still receive in nominal terms the pension that has been promised to you, but you might not be able to buy a lot of stuff with it in a few years. So that's the devaluation of the paper money, and it's been always the problem for not only decades but centuries, and that's why mankind always returned back to gold. And I believe it's not different this time around.
Mm-hmm. The crack-up boom is a theory that you've talked about often. It talks about a collapse of the monetary system, expansion of the credit supply, huge amounts of inflation. Can you explain this theory in a little bit more detail than my description and how it affects our current system?
Yes, I mean, one of the main drivers, obviously, is the loss of confidence in the currency, right? And we see this again. It's a process. It's not happening from one day to another, but more and more people are waking up, losing the confidence in the dollar. It's not only the dollar; it's also the euro and all these other paper currencies. And they're all trying to diversify into hard assets that can be real estate, that can be stocks, and obviously precious metals and commodity related investments, and also to a certain extent Bitcoin and maybe some of the other cryptocurrencies. And that's the main driver. I mean, now, as you can see, inflation is a vicious circle, because once you realize that prices are going up, you also tend to increase the prices for your own services and goods. And you usually tend to buy everything now instead of waiting, because you expect in a year from now getting less for your paper money. And that's one of the psychological drivers behind inflation. And I think that's also one of the reasons why it will be sticky and not really going away over the next few years. And at the same time, in the big picture, we have China owning large parts basically of the planet nowadays, with partnering, especially in Africa, where there's a lot of resources and commodities, and Russia as well, one of the big commodity players, and those two countries can easily decide to not give any more resources to the Western world. Now we are in a war situation, and at the same time, the move towards green energy, this will take a lot more copper, a lot more other commodities, and there's simply not enough around. So it might be a supply-driven inflation here in commodity prices as well. Of course, I haven't talked about energy. I mean, oil, of course, in a war scenario will also go through the roof. This is all very inflationary, all basically supporting that loss of confidence. And at the same time, we have huge debt levels. The debt ceiling discussion in America is not going away. It's coming up again every year. And now the fight about it is even stronger and more intense than ever before. And this all leads to a cracker boom where you can see that basically the central banks have to print more and more money just to keep the system running. At the same time, the loss of confidence in that paper system, and that means rising prices, and then everything can go still much higher. I mean, you've seen stock markets explode in the hyperinflationary situations in other countries. So that's basically the cracker boom.
Okay. Florian, I'm just going to posit a challenge to that. Well, not to that theory per se, but to the notion that inflation may be sticky long term. We're seeing the M2 money supply taper off and come down somewhat from its peak. If the expansion of the credit supply has caused inflation, does it not stand to reason that a decrease in the money supply would decelerate inflation and perhaps cause even disinflation?
Yes, in the very short term, I would agree with you. Basically, last year was overall a rather deflationary year. But if you look at the balance sheet reduction, I mean, they haven't done a lot, right? They just basically started. I mean, if you would imagine what's going to happen if they really would scale down all these balance sheet expansions that they have done since the financial crisis, I mean, that's incredible. It's impossible to imagine the effects. And so I think what we are seeing right now is similar to what we've seen over the last 15 years. They're trying to move back to normal, but it will not work. Right now, we are still experiencing a lag of these Fed hikes and the tightening, the quantitative tightening, usually 12 months, around about a year. It will take until it really shows up. You see already mass layoffs by all the big companies. I think that will intensify, and I think by the summer we're going to see more and more the dire consequences of that tightening and rate hiking. And then we will have to see, is there going to be a pivot immediately, or is there maybe they try to wait a little bit longer until really something is breaking in the system, and then it's going back to money printing, quantitative easing, balance sheet expansion, the same thing that we've seen over the last 15 years. I don't think there's any way out of it. The only thing that they've been successful in is buying time and kicking the can down the road, so to speak.
Can we see normal levels of inflation, perhaps within the 2 to 5% range? Well, some people say 2% inflation is not possible ever again. I'll come back to that. But can we see a normal level of inflation during a time when we see $9,000 gold? In other words, your call on $9,000 gold, does that require very, very high levels of inflation or a crack-up boom?
Yes, it does. I think it will not move there slowly without some devastating events in the economy and in the society. So that goes along with it, of course. So,
all right. My earliest... Please continue. Yeah, please.
Yeah, I mean, my inflation might come down to, let's say, 4 to 5%, and it's coming down due to this hiking over the last 8-9 months. But again, I mean, we are in front of a potential World War III, and war has always been very supportive for rising energy prices and commodity prices. And so I don't think that inflation will come back down to those 2% that we experienced until 2021.
Well, hold up. We're potentially in World War III. What we're going to see, potentially going to see, what will cause this?
Well, I mean, there is a war going on in the Ukraine for a year already.
Yeah.
Western countries sending in more and more tanks, weapons. Now Ukraine even requests airplanes. And I think the Russians are feeling this as being part of Ukraine and being part of the war. So unfortunately, there's only warmongers in the media on both sides. I don't see any diplomacy. I don't see any people trying to bring peace here. And this could escalate very quickly into a very nasty situation. And it's unfortunate. If you compare what happened in the months, or maybe let's say 1-2 years before the First World War, you had something similar. I mean, the German press and also the British press have been warmongering nonstop, and you know the consequences out of it. So I think that has to be a serious worry now. I don't like at all to see Germany sending tanks into it. I would love to see somebody trying to figure out peace and diplomacy here. I understand that it's a very complex situation. However, war is never the right answer. Unfortunately, there is only warmongers that basically have the voice in the media. And again, I mean, in a war scenario, you need a lot of commodities to build weapons. And where shall these come from? Of course, somebody has to finance the war, so you can be sure that the central banks and the state will somehow create artificially more money to continue running the war. So it's a very dire situation right now. I personally can't believe we're in the 21st century and are seeing that. You would have thought that mankind is a little bit more wise, but again, there has to be peace negotiations, there has to be diplomacy, and there has to be a way that people sit together on a table and figure out if there is any solution that basically where both parties can keep their faith.
Okay, you talked about escalation of the war. Well, in terms of hardware, yes, from the Western allies in particular. What's next? What would cause a further escalation? I mean, nobody knows for sure, but let's speculate and perhaps talk about scenarios that we wouldn't want to see necessarily, but could happen.
Well, often in the past, it has been some form of a false flag event that then basically pushes a country further into a war situation. Yeah, I mean, it's not far away from here in Germany, you know. This can further escalate. I mean, the Russians have made it clear that there is a red line for them, and if there is now German tanks, and Americans will also send more weapons and tanks. And I don't know. I mean, it's a very complex situation, but it's certainly not a good one.
Well, Russia is not going to attack Germany, right, for sending tanks. It's not. Perhaps it will escalate its military involvement in Ukraine, but I correct me if I'm wrong, but I don't think strategists are predicting an escalation outside of Ukraine, or maybe I'm wrong.
No, I mean, right now there is no evidence of that, and hopefully it will never happen. However, I mean, if you study history and look at wars in the past, it's unbelievable in retrospective how things have basically unfolded.
Yes.
I mean, the First World War happened with the assassination of the Austrian son of the Kaiser back then, and you wouldn't have thought that this would lead to World War III, to World War I, sorry, but it did, and more countries got involved. And right now, it's actually already the Western Alliance, the NATO, the European Union, America, against Russia, which is backed by China. You know that there's this other situation in Taiwan with China. So, I mean, there is a lot of hotspots. So you have another hotspot in Iran and Israel. I mean, this could all escalate like really nasty and crazy. Again, I don't see anybody talking peace and diplomacy, and that's the most worrisome factor in it.
When we talk about wartime investing, obviously it depends on the scale of the war, the conflict, and also where it happens. But let's just suppose we have a world war. I'm not saying we will. I'm not saying it necessarily needs to happen. But suppose we have a world war. What can history tell us about the asset classes that have, I don't want to call this war profiteering, but the asset classes that have done well during prolonged conflict on an international level?
Well, of course, it's defense stocks, it's weapon manufacturers, it's energy, oil-related investments, and it's commodity-related investments. And the stock market probably will overall hold up more or less okay or well, simply because there's going to be a lot of money to run the show, So that's probably the areas where you would want to be invested, although I'm personally not buying any weapon manufacturers and no other defense stocks that basically help to participate in a war.
Yeah. Gold worked for private individuals. It was difficult for World War II because we were on a gold standard. Well, not yet on a gold standard, but gold was not entirely freely floating. Perhaps things would be different now. What about alternative assets, art, perhaps even government bonds?
No, I would stay away from government bonds in that scenario, because you don't really know who's in the end of the day going to win. I mean, I assume anyway that nobody's going to win, because remember what Einstein had said many decades ago. He said that he doesn't know which weapon will be used in the Third World War, but he knows that the Fourth World War will be fought with stones and wood, basically. So because look, the level of technology that we have now in weapons, I mean, it's going to screw up the planet completely. And so we really have to make sure and tell those warmongers, peace, please talk peace.
Okay. On that happy note, let's finish off on cryptocurrencies. The year of 2022 has been hard for risk assets. Summarize for us the main causes of this bear market.
In Bitcoin, you mean? Or
Bitcoin.
The cryptos? Yes. Well, I mean, in retrospective, it's very obvious that we had this massive bull run that started basically with the low of the Corona crash in February 2020, and from there, Bitcoin basically went from $3,800 up to $69,000 over the course of a little bit more than 2 years. And at 69,000 in November 2021, yeah, everybody was obviously bullish. I didn't really see the top exactly there. I turned bearish a little bit later, but still saw the change in the environment. And it's, in the end of the day, it's always the same cycles in that sector. You have crazy bull runs, and then you have devastating bear markets. And that bear market lasted from November 2021 up to November 2022. And Bitcoin went down from 69,000 to 15,000 something, 75% pullback. And in November, everybody was so bearish. The news, especially the scam and the problems around all these lending platforms and the FTX disaster, that all basically pushed the sector further down. But starting in November, Bitcoin didn't really react to that bad news anymore. And now, since early that year, Bitcoin is basically back, and it looks like we've seen the lows. It looks like we are in a new cycle, at least a nice bounce or a recovery. I wouldn't be surprised to see Bitcoin recovering to 35,000, maybe even 50,000. If it does the same like in 2019, after the bear cycle that started in December 2017, which took Bitcoin down from 20,000 to $3,200, also a devastating bear market. But then Bitcoin quickly recovered. Starting in March 2019, it went up 350% in 3 months. So we could see something similar over the next few weeks and months, Bitcoin recovering towards 35,000, 50,000. And we would still be clearly below the all-time high. And after that, I would expect a pullback again, and probably back towards the 25, 20,000 kind of range, together with the stock markets. Because again, what I said earlier, I assume that somewhere in the summer, we're going to see really the consequences out of the hiking cycle. And we're probably going to be back in the bear market in stocks, and that will also create challenges for the crypto sector.
Okay. Now I'm curious to get your thoughts on my final question, and I'll leave it here. Your predictions for the best asset class for 2023. We've revisited it. We've done this question every single year, you and I, and to my memory, you have not gotten it wrong so far. So what about 2023? What is your prediction?
Right. Yeah. Last year I was basically bullish on the dollar, and I think this year it's time again to be bullish on gold. I think that gold, it doesn't take much now to take out the all-time high around 2075. We might see this now in the coming few weeks or in the next 1-2 months. Usually gold has the tendency to top out in spring and then correct, let's say between March and June, July. It's usually not a time where gold and gold-related investments perform well, but gold then usually finds an important low somewhere in early midsummer, and third and fourth quarter are usually strong. So if you put this together with the technical setup, gold needs to break out above $2,050, $2,075. If it managed to do that later in the year, like really sustainably, I think we could go to $2,500 by the end of the year.
Okay.
And that's a nice return from where we are right now. Bitcoin might also see a nice recovery over the next few weeks and months, but I assume later, saying midsummer, maybe August, September, and then third, fourth quarter, we probably will see some weakness again. So that's why I'm going for gold.
All right, gold again for 2023. Thank you so much.
Maybe I should actually add, it's probably also silver then. Yeah.
Gold and silver. All right, so a bit of a shift from the last time we spoke a year ago, but all right. Well, the tides change and they shift, and they change back again. That's how they work. Thank you,
I think
Florian.
that's a very important insight, David. I mean, there's a lot of opinions on Kitco and generally on YouTube that you can watch every day, right?
Yeah.
And if you look in your personal life, when we talk about your spouse, your girlfriend, or your best friend, you don't want opportunistic people around you, right? You want to have people that stay with you in the good and the bad times and that you can rely on. In the markets, however, you have to be an opportunist because it's always changing. You have to accept that nobody knows the future and that things are constantly changing. And what I might have said 3, 6, 12 months ago is not necessarily true anymore. There are some basic principles, of course, that you can stick to, but calling or forecasting a direction of the market is always tricky, and that means you have to be willing to reassess and then maybe change your outlook, and that might look opportunistic, but I think that's the only approach when it comes to trading and investing, and selecting which investments you want to do.
Yes,
but again, you have principles in trading and investment that will help you to follow in the right path.
And before we leave, Florian, where can we learn more about your work?
You can go to Midas Touch Consulting.com. That's our website. We also have a free Telegram channel with lots of good people from all over the world where we share investment ideas specifically related to precious metals and cryptocurrencies. And we have weekly chart books on gold, silver, Bitcoin. And I tend to appear regularly on Kitco and other YouTube channels, and happy to have a new follower. Thank you very much.
Thank you. And thank you for watching Kitco News. I'm David Lin. Don't forget to subscribe.